morning. Today, of course, December report is the usually fairly important because it gives us another look at the supply and demand, but doesn't really. It looks at the demand, but doesn't necessarily look at the supply side. So, looking at it, corn, kind of a non-event in the whole situation, but corn exports were dropped 50 million bushels, which is can be expected because we've been lagging behind what we really need to do to get our demand back into this whole situation, and I think there's a lot of concern by the importers that we have tainted corn with aflatoxin and mold and so forth. So we'll see how it goes forward out there. I think we'll probably lose another 25 or 30 million bushels going forward. The exports today, however, were very good. They were above expectations at 847,000 metric tons. So pretty good export number today. The key in the corn thing was that the government did not reduce the feed usage, and there's been a lot of talk about non-profitability in cattle, but yet the cattle keep coming out with higher weights. USDA, for the most part, still doesn't believe that we're liquidating the hog herd, but I would be very careful on that one because I suspect there's going to be evidence coming very quickly that the gilt retention has dropped off significantly, which means that 6 months down the road we'll likely not have as many hogs out there, and so we need to watch this market very closely. If that's true, then feed usage may drop as well, and the livestock industry cannot stand these kind of prices, and something's got to give. The livestock's got to go up in price, or the price of corn has got to drop. Soybeans about as expected. The government recognized that we're sending more to China, and they're going to continue to buy. But we're getting into the January time frame here pretty quick, and I don't know if this isn't going to be starting to be old news pretty soon because we're at these high, lofty levels for a reason in anticipation of tighter supplies, trying to get hands on these beans to ship them out of the country. So basis has widened in my area. Basis is terrible in corn, 58 cents today. Corn is, or soybeans are from anywhere from 50 to 60 cents in North Dakota. They're even higher, where nobody wants to take beans into the Pacific Northwest because they're backlogged. So watch these markets pretty carefully today in soybeans and corn. With exports being good in both beans and corn, we'd better see this market rally after such a pretty good thumping the last few days. Outside markets are good as well. Gold's trying to recover a little bit, and crude oil is back up a little bit. The dollar's down. So, and in wheat, the significance I saw there, which concerned me, because I wrote an article in Top Producer about this, about when will this nightmare end or whatever, and what I was looking at was using wheat as an example that we may recover our demand to the pre-2007 and 2008 bubbles that we had. So if we could wipe those 2 years off the map, we would say, what did we do in 2006, and can we go back to that level and recoup from there and go forward at 2 to 3% more demand for feedstuffs worldwide? And it looked like we were going to start milling and using more wheat for milling, for flour and so forth, as our economy picks up. Now today the government said where they're going to use less domestic usage of wheat, and so they raised the carryover. But if you dig into the WASI report, and I always like to look at that as to their reasons why they did certain things, they're saying it was because of the efficiency of extracting more and better flour from the wheat that they got. So it doesn't mean that the consumption in the United States is not returning back to normal. In other words, more pizza, more bread on the table. I look around, I go out to restaurants and I look around and see how they're putting bread on the table, and some places started doing anything they could to save a dollar, and there was less bread unless you asked for it. Starting to come back a little. So that's kind of an indicator to me that maybe we could see some demand back. So on the surface it looks negative, increasing the carryover, but digging deep in the numbers, perhaps we bottomed out in the demand for U.S. wheat, and of course with the wheat numbers we have, we need a problem worldwide in wheat production, and certainly we're going to reduce the wheat acres in the United States. Other than the slight modifications, I think the bottom line is this is a fairly benign type of thing. But if you look at the outside markets, they're a little bit supportive. You got to be real cautious in here. I look at these markets and say supportive. The export numbers were good today. We got a lot of corn in the field. Snow, we're never going to get back at them again for quite a while now in some areas. I've got corn in northern Illinois that I just as soon leave because of the high cost of drying it. So a lot of positive reasons why grain ought to go higher. If markets don't go higher today or close higher today, then we have to be real concerned. So my mode of operation today is let the market trade about 5 or 6 minutes. I don't want to see January beans close below 10.21, and I don't want to see March corn close below 377.5. So when markets open higher, then I'm likely to put sell stops under it and go from there, and to increase my coverage from a current 60% to probably 75 to 80% in the futures only. Cash markets are so terrible and basis so wide, you could hedge the futures probably in corn particularly, and not make or lose a dime, but see the basis rally on up into next year. So I'd like to store 40% of the crop and having it hedged periodically. 60% of it's gone quite some time ago. So I'll deliver that grain and try to keep this rotten corn crop we have in quality control. That's all for today. January report is going to be a blockbuster, but I wonder even then whether we will have enough information to the government to want to put themselves on a limb and say, yes, we lost some corn in the field, because remember, next month's report is based on December 1 conditions, which is already 10 days ago. We still had 20% of the crop in the field 10 days ago. It may be a long winter trying to outguess what we have, what we really have, and how the demand is unfolding until even March 30th stocks report, which will finally have all the numbers in it. So it'll be a long winter in more than one ways than one. Have a good day and good marketing.
Thank you very much, Jerry.
Adios.
Bye-bye.